Good afternoon from Hong Kong. My name is Aidan Gregory, Senior Correspondent at InsuranceAsia News. We're here at Taiping Re's offices in Hong Kong to discuss the outlook for the reinsurance market in Asia Pacific. I'm joined by Sheldon Yu, CEO of Taiping Re. Thanks very much for joining us this afternoon, Sheldon. It's great to have you here.
Yes, thank you, Aidan. It's my pleasure to meeting you today.
It's certainly an interesting time for the reinsurance market in the region. What are your key outlooks as the year progresses, and what was your experience like of the recent 1/1 renewal period?
Yeah, I think it's a hot topic today after 1/1 renewal. Overall, the current reinsurance market dynamic is driven by two major factors. The first one is rising natural catastrophe risk, and the second factor is increasing flow of capital and more capacity in the market. With the rise of natural catastrophe events, the frequency and the severity of natural catastrophe events are all rising at the same time. Persistently significant losses caused by those natural catastrophe events to the economy and the insurance industry have become the new normal for the whole sector. 2025, there have been many severe weather events affecting many parts of the world. For example, the heat wave in Europe, the wildfire in California, and also the heavy flooding recently in Southeast Asian countries due to intense and successive monsoon conditions causing very severe rainfall in those regions. And in Asia, for Taiping Re, we have experienced some flooding events in Thailand and also earthquake in Myanmar. The risks in the market should have properly reflected the losses and also make the terms and the conditions adjustment in the near future. However, it's likely to be tempered by the abundance of more underwriting capacity in those regions. I think in many regions, the risks continue to move downward. However, as you know, many reinsurers, I think, have achieved satisfactory profits over the past 3 years, thanks to both good underwriting performance and investment income. We have seen the reinsurance market gradually transferred to a buyer's market. So we do think, expect a more intensified competition and downward pressure on pricing in the near future. And at the same time, we do think both insurers and reinsurers maintained underwriting discipline, and we anticipate the current insurance environment conducive to a healthy development of the whole sector in the future. Of course, as we have talked about loss-affected regions, we anticipate the risks and the reinsurance terms in those regions may remain stable or increase in the near future. However, for loss-free programs and non-property business lines, I think there's a growing pressure, downward pressure. But overall, we do think reinsurers will uphold underwriting discipline, and in the long run, we do think, or in the near future and in the long run, there is something different from the past market. If majority of the reinsurers remain disciplined in their underwriting strategy, we do think the whole market is overall profitable in the near future. Reinsurers, I think, shall also pay attention to emerging risk in areas such as AI, data center, renewable energy, low altitude economy, and autonomous vehicles, as we talked quite a lot recently. I think, for example, for Taiping Re and also other reinsurers, I think we needed to develop more tailored solutions to meet the evolving need of the direct market, narrow the protection gap in the market.
I wanted to ask you, are there any specific lines or markets, where Taiping Re feels that it can grow through the current cycle that we're in?
Catastrophe business lines will be our focus this year, and I think under a softer market cycle, it's essential to diversify our book to achieve a more predictable and not so volatile underwriting result. Health reinsurance will be also another business line we would like to develop to take advantage of the opportunities in Chinese mainland.
Taiping Re has a major presence here in Hong Kong.
Yeah.
How do you see the firm, contributing to the development of the insurance market in the Greater Bay region?
Okay.
Particularly when it comes to innovation and development.
Yeah. Okay. I think that's a very key question for Taiping Re to consider. As Taiping Re is born and raised in Hong Kong, and Hong Kong is one focus point of the Greater Bay Area. So I think as this is where we are rooted, Taiping Re is rooted. So it's our responsibility and commitment to grow and develop our home. I would like to talk about this issue on three levels. The first level is the fundamental level. That means for infrastructure. Hong Kong is strengthening its position as an international risk management center. So as a risk management center, I think Taiping Re should do something relating to technology and risk models. So as you know, we are building the first customized flood risk model for Hong Kong market through cooperation with the Hong Kong University of Science and Technology. For the middle level, there are three areas. Taiping Re has taken a series of initiatives to support the development of this market. Traditionally, we are quite strong in property reinsurance. So Taiping Re has a long-standing history of providing underwriting capacity to key projects in Hong Kong. For example, all the major infrastructure projects in Hong Kong, Taiping Re have provided reinsurance support. So we will continue to provide more underwriting capacity to support the local economy and to our clients in this market. The second, I think, is to provide and develop more products for cross-border activities. Currently, more Hong Kong residents are traveling to Guangdong province or to Shenzhen to see dentist or to seek medical treatment. Just last month, we have partnered with AVO Insurance, the first digital general insurer in Hong Kong, to launch the cross-border medical insurance products for Hong Kong residents. This is the first pilot project conducted by Taiping Re. So in the future, Taiping Re will work together with our partners, including direct insurers in Hong Kong and third-party administrators, to upgrade and develop more health insurance products to provide protection for Hong Kong residents to Guangdong province or live in Guangdong province with more safety and at ease. So this is the second area, to provide more cross-border products. The third area, we believe if Hong Kong would like to strengthen its role as a international financial center, I think we need to attract more players into Hong Kong. So as you know, Hong Kong government is committed to promoting the captive market in the past several years. We also have done quite a lot to support the development of captive market in Hong Kong. As we know, Hong Kong have a lot of advantages compared with other regions to issue cat bond.
There's certainly strong momentum, as you say, behind the insurance reforms here in Hong Kong. As part of that, the creation of the local ILS regime has been very important.
Yeah.
Are you pleased with the progress that's been made in Hong Kong so far in terms of establishing the territory as a viable jurisdiction for ILS issuance?
Yes, definitely. As I mentioned, we issued the first cat bond in Hong Kong. During the issuance process, we have felt advantages of Hong Kong as a location to issue a cat bond fund. For example, the extensive financial network, the robust regulatory system, and of course, the smooth and very efficient approval process to set up SPI in Hong Kong, and of course, most importantly, the favorable policies released by Hong Kong government and the insurance authority, the RLS pilot grant scheme. If we looking into the future, Hong Kong do have many opportunities to strengthen its role as an ideal position to issue cat bond. For example, I think the first factor, Asian insurers and Asian reinsurers would like to utilize insurance-linked securities to diversify risk into the much broader capital market. Second, as we have learned from the past 20 years record of cat bond fund, cat bond fund can offer potential attractive risk-adjusted returns compared to other investment instruments. Cat bond fund or cat bond can be a very cost-effective portfolio diversifier. And of course, Hong Kong government also continue to promote Hong Kong as an ideal location to issue cat bond fund. The Hong Kong government has announced in the 2025 to 2026 budget that the existing RLS pilot grant scheme will be extended by another 3 years to the end of 2028. We are pleased to see the news, and I think it will promote or attract more issuers to consider Hong Kong to issue a cat bond here. For Taiping Re, we would like to take more efforts in this area, not only for the own benefit of the company, but also to promote Hong Kong's role as an international risk management center.
Sounds like your experience during the debut cat bond issuance was very positive. You wouldn't rule out a return to the catastrophe bond market in 2026.
Based on the company's own retrocession need, I think this year we will focus on feasibility study and more research on insurance-linked securities, especially sidecar. But for cat bond fund, I think we need to consider whether or not to renew it by the end of next year.
Thank you for joining us this afternoon, Sheldon. It's been really great to hear your perspectives on the reinsurance market in APAC.
Thank you very much.